Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, September 13, 2010. We had a theme of risk appetite in today's trading, as better than expected Chinese data teamed with an upwardly revised forecast for Eurozone growth to boost risk sentiment, leading investors out of the safe haven greenback and into higher yielding currencies and the euro. Also, over the weekend, an agreement was hammered out by the Basel Committee on Banking Supervision, which gave lenders as long as 8 years to comply with higher capital requirements intended to prevent future financial crises. This was a relief to banks. All in all, we had pretty strong performance in global stocks and risk-on trades in currency markets. Let's take a look at the data from China released over the weekend. Industrial production rose 13.9% in August from a year before, the most in 3 months, and retail sales and lending figures exceeded economists' estimates. Consumer inflation rose to 3.5% annual terms, but that was in line with expectations, and we saw producer prices cool. China needs to walk the policy tightrope between keeping the economy from overheating, while at the same time not choking growth, a balancing act that has led to some investor concern. The data shows that growth most certainly isn't getting choked, which helped sentiment, but we'll see if the higher lending figures means the Bank of China decides to take further steps to cool the economy. China's premier said, quote, "China's economy is now in good shape, featuring fast growth, gradual structural improvements, rising employment, and basic price stability," end quote. That's a sign of his confidence that the nation will avoid a sharp slowdown. Now let's take a look at the reaction in currency markets. First up, the euro-dollar pair, which we see rallied very strongly. In addition to the Chinese data, the European Commission said that the Eurozone economy will grow 1.7% this year instead of the 0.9% projected back in May, thanks to strong growth in industrial exports. With the Basel Agreement adding icing to the cake, we saw the pair surge to start trading on Sunday. We came in to this week at 1.27, but we quickly moved above the 3-session consolidation zone we had in the end of last week. We broke above our 200 period moving average at around the 1.2765 level and continued rallying until we capped off at 1.2890, below the highs we had last week at 1.2920. Now, this level did stall the last euro rally that we had and also acted as resistance back here in middle of August. So that's an important test coming up for this pair, whether it can move above this 1.2920 level. If we do manage to move above that level, we'll see if we can further retrace this full downswing during most of early August from 1.3330 to 1.2594. So the next levels being most likely the 61.8% retracement of this downswing at around 1.30. The developments over the weekend helped to ease worries over the health of the global banking system and concern over the pace of global growth, which gave investors and traders a green light to bid higher the Australian and Canadian dollars, commodity-linked currencies that consider tied to positive global economic activity. As we can see in this look at the Australian dollar versus the US dollar, we extended our rally from last week and from the week before that, moving above the 0.9270 area, which was our highs from to end last week. We moved all the way higher until we reached the 0.9350 level in late New York trading. Now, Australia's recent growth has been supported by Chinese demand, so the signs that China's economy is still chugging along strongly will continue to be a boost for the Aussie. We target the highs for the year at 0.94 next. The US dollar Canadian dollar, meanwhile, hit a 3-week low or a 3-week high for the Canadian dollar, testing the area around 1.0265. We had outlined this level last week after we had broke below the 1.0480 level in early trading last week, and as we can see, this was our support from around August 19th. So now we are testing that support currently. If we break below that, we look to target just below the 1.0150 level, our support from middle of June and also early August. Taking a look at the pound dollar, we see that for the last 2 weeks we've been trading very sideways in this pair after we had a pretty sharp sell-off of the pound and in favor of the dollar during most of August, when we had concerns over global growth as well as concerns over UK growth as the government is preparing austerity cuts, and there were some weaker PMI reports on manufacturing, services and construction to start the month. This week in the UK, we get data on employment, retail sales, and more importantly, consumer prices, as well as the inflation report hearings, which could give investors some clarity about the direction the Bank of England wants to take going forward, which could give the pound a clearer direction as well. So look for a break of either to the upside around above 1.55 or below 1.5350, our recent low, for a new direction in this pair. The dollar-yen pair, meanwhile, broke its recent short-term uptrend and is moving again in favor of the yen. The dollar-yen pair is very sensitive to bond yields in the U.S., and we did see short-term U.S. yields fall today as investors bought U.S. debt following last week's correction in treasuries. Though this does break the trend of strong U.S. stocks, making U.S. yields rise and bond prices fall, so we didn't see the same correlation in today's trading as we have been over the past few months. In any case, the lower yields did give less incentive for Japanese investors and institutions to buy and hold U.S. treasuries, which means that this pair moves in favor of the yen. We tested the lows around 83.50. Those are some of our lows from last week, though we did go down to 83.30 at one point. So we'll see if this area acts as support or if we continue to see the yen falling. So far we have been unable to move below this 83.30 to 50 area, but if we do, then that opens up the bottom for further yen increases. In the US, the government posted a smaller budget deficit in August compared with the same month last year, helped by rising tax receipts. The excess of spending over revenue totaled around $90.5 billion last month, smaller also than the median forecast of economists, as the economic recovery has helped generate more tax revenue for the Treasury. The rest of this week will feature data from the U.S. on the factory and retail sectors, as well as inflation, which will be important to determine what happens with risk sentiment. We have 3 reports on factory activity. On Wednesday, the New York Fed will report its Empire State Survey for September. Economists forecast the Business Conditions Index will rise to 7.8 in September from 7.1 in August. The Philadelphia Fed will follow up with its regional report on Thursday, where the median forecast is for the Philly Activity Index to increase to 0.0 from negative 7.7 in August. Both of these are leading indicators for September's ISM Manufacturing Index. Industrial production, which measures the output that has already happened, is expected to have increased 0.3% in August, following a 1.0% rise in July. Tomorrow, we get retail sales figures, a key report on economic growth. Economists expect total sales to have climbed 0.3% in August. If we exclude vehicles, sales probably rose 0.4%. A second straight month of positive results in terms of retail sales will definitely be a positive sign. On Friday, we also get a look at consumer confidence, which is also expected to rise. On tap as well will be consumer and producer prices. Inflation is expected to be positive, though core rates are expected to only inch up, so that shouldn't put any pressure on the Fed in terms of thinking about raising rate. Taking a look at the upcoming fundamental docket, for tonight we get retail sales from New Zealand, consumer confidence and housing prices from the UK, as well as measure of business confidence from Australia. Overnight, the UK posts its consumer prices, Germany releases its EW economic sentiment, and the Eurozone posts its industrial production. The key figures here will be the inflation report from the UK as well as Germany's economic sentiment. Tomorrow, as I mentioned, we get US retail sales, but Canada has 3 releases: labor productivity, capacity utilization, as well as new motor vehicle sales. At 10 a.m., the US will release readings on business inventories as well as economic optimism. And that will wrap up today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.